Hello, beautiful traders. Today, let's talk about how to spot when price is ranging or consolidating. Some people like to say when price is being squeezed. It's all the same. It's when price is moving up and down in a range. It keeps going to the same high and the same low, and it looks like it's stuck. Looks like it's sideways, moving sideways. And your normal strategy of trading the trend, trading above the trend line or trading above the EMA or whatever your trend strategy is not going to work when price is ranging. You're going to have loss after loss. So you need to have more than one strategy. Let's jump into TradingView and take a look. Okay, we're in TradingView. This is NQ with 1 minute candles. This is the end of the day. This vertical line here is the end of the New York session. So near the end of the day, there was a long period of consolidation. Lasted more than 90 minutes, almost 2 hours. So we see price go up and it makes a top here, and then it comes down and it makes a bottom. You can see price is having trouble getting through here. That's 2 touches. I like to see 3 touches to make a range. So that's 1. There's a few touches down here. It goes up pretty close to the top and then comes back down here. So that's very clear touches at the top there, the bottom. But remember, it doesn't have to touch the line exactly. Think of it as a band. Sometimes the wick goes through a little bit, through a little bit here. Sometimes it comes close to the top, but not exactly. That's okay too. Think of it as like a band. So now we know we're in a range here and here. And you might not get it exactly at the beginning. Maybe you think it's a little higher or a little lower. You can adjust it as it's going, as you're watching the price action. So touching the bottom here, going up, it touches the top. I thought it's going back down, but it goes a little higher. I'm thinking we could be breaking out here. But sure enough, it comes back down into the range and touches the bottom again, and then tries breaking through the top here. So it looks like the range is a little higher, top of the range is a little higher here, but remember it's a band. So it can be 5 points higher, and that's still, you consider the top of the range. It comes back down, bounces off the bottom a few times. It actually goes up right near the top. You can consider this hitting the top because remember it's a band, not just a line. And it stays in there, bouncing up and down until right here when it breaks out. How do we know it's out? Well, a lot of people say when price is ranging or consolidating, it's building up pressure. So eventually when it breaks out hard. And sure enough, it does here. You can see these bright candles. Bounces up, comes back down, touches the top of the range before going up again. And that's often the case. When it breaks out, it often pulls back to the range. Not always, but often. So that's one example. Let's look at some more examples. That was Friday, the 24th. Let's look at Thursday, the 23rd. And I already drew the lines on here, so you don't have to waste your time watching me draw lines. Okay, so good uptrend, downtrend, price wedges here, up, and then here we have our first trend of the day. Makes a top, comes down, makes a bottom, touches a couple times, goes back up. That's the third touch, and we know we're in a range. So we switch to our ranging strategy, and price goes up and down between that range for a while. Here it looks like it was going to break out, but don't panic, don't get too excited with the trigger button. Price comes back, does a big whiplash, whip up and down before going up again, and stays in that range before breaking out pretty hard here. It looked like it could be come back down, but we don't know. In this case, it broke out and didn't come back. Often when price breaks out of a range, it just goes to a new range. So this is almost you could say the top of this range became the bottom of the next range. That's very close. So in this case, comes down, makes a top here, bottom here, goes up higher here. So I would have guessed that the top might have been higher, but nope, came back down hard to our bottom, back up to our top. Remember, it's not just a line, it's a band. Before coming down hard, breaking out. And in this case, price came down and then came back up, bounced off the bottom again. It's common to do that and stayed there bouncing off the bottom for a while before heading back down. And do we have any more ranges on this day? Good downtrend there, good uptrend, nice downtrend. And yeah, here's a trend. You can see the top, one touch, 2 touches, 3 touches, we've got our range. This is a pretty tight range. We're at 948, goes up to 960. That's only a 12-point range. And it stays there for a while. And then when it breaks out of this range, notice it goes right back in a new range. 1, 2, 3, we're in a new range. And the top of the old range became the bottom of the new range, and it bounced in there until breaking out hard at the end of the day. This time it didn't come back to touch the top, it just broke out hard. Let's look at one more day. We'll look at the day before. This is Wednesday the 22nd. Okay, so a good run up in the morning, a good trend up, and then it gives us a top, comes down, a big wick down, but closes here, and the next candle closes at the same place. So we've got 2, and then goes back up. There's our third touch here. You can call this another touch as well, and that defines our range. And then we switch to our ranging strategy, and price goes up and down in that range a few times before breaking out. It actually only went up a little bit, and you can argue this is still in the range, because it's only less than 10 points higher, and then comes back down. And you could even argue that this is in the range too, because it breaks down a little below, but not much. That could still be in the range. So we could say, let's just grab this and drag this out. You could say we're in the range that whole time, even. And keep doing your ranging strategy. Before the price breaks out on a good uptrend here, you see the trend line, price staying above the trend line, and then there's a good downtrend here. And then we're getting near the end of the day now, I think. And it goes into a long period of consolidation. Comes down, I thought that was going to be the bottom of the, I think I drew the bottom of the range there, but then price went up, touched here, and then came down further. So I moved my bottom of the range line lower, and then it went up, and it came back down to the bottom there. And I thought it was going to keep going up, but it didn't. It broke down lower, and it stayed at the bottom there, and bounced around the bottom there for a few times. Even when it broke out, it came back to the bottom, touched the bottom again before going down after hours there. So I got a few more things to show you. Okay, we're back in TradingView, NQ 1 minute candles. This is the end of the day on Friday. This is the end of the New York session. So we looked at this period already. How would we trade the range? So what I like to use is the limit orders. So the price automatically triggers to open positions. So in this example, I'm doing 10 points of gain for take profits and 10 points of loss for stop losses. So 10 and 10. So when price came down, touches the bottom of the range here, I would have opened a long and easily got the 10 points of gain just a couple minutes later. Price goes up to the top, triggers a short from the top, and easily comes down to get my 10 points of gain there. Price comes back up, my limit order would have got me in another trade here, which would have got stopped out. Price went up higher than I thought, and actually expected with these strong candles we might be breaking out, but nope, price came back down. I would have had another limit order at the top of the range here for a short, and sure enough went down, easy 10 points. Went to the bottom, triggers my limit order, easy 10 points of gain there, and you get the idea as price goes up and down. And so there's a loss there, and we get another loss at the end as price comes up, hits the top. I'm expecting price is going to stay in the range, but eventually it's going to break out. So usually you're going to get a loss at the end of the range as price breaks up, and that's what happened there. So now, how do we do? I took all of these trades and I put them into a spreadsheet, which is here, and I said one contract per trade is $20 per point. So each win is $200 and each loss is $200. There was 12 trades, 10 winners, 83% win rate, a total of $1,600 for that almost 2-hour period. And that's a fantastic win rate and profits. I'd take that anytime. But let's take a look at something else. So we were doing 10 points of take profit. Why are we just doing 10 points? I like to set the take profit to match the size of the range. But first, let's try changing that 10 point take profit to 15 points, and let's see how our profits change. So what I would do is, if I double click these little positions here, I could change this from 40, which is 10 points, to 60, because every point has 4 ticks. And you can see that first trade, that would still be profitable. And I can go through and change all of these. Now I'm not going to do that because that would be boring for you to watch me change all those. But if I did, if I went through and changed all these to 60 points, 60 ticks, which is 15 points, then our results are here. So instead of $1,600, it changes to $1,800. So in this case, we have 2 failures, 2 in a row there, and a third one at the bottom. Our win rate is now 72%. But although we have a couple more one more failure, we have more profit per trade. So that's why our gains at the end of the day is 1,800 instead of the previous 1,600. So that worked better. Now let's take a look at that range again. If we go to the bottom, and that's 865, and then we move it to the top, and that's 884. That's about 20 points. So now what if we change these positions and we say we'll do 20 points for take profit. So we're going to change this to 80 and change all these to 80. Now I'm not going to do that now because that's boring, but I did that already. I took the results, I put them in a new table. So with 15 points of take profit, we got 1,800. Now with 20 points of take profit, we have 2,400. So our win rate went up a tiny bit. We have 2 losses and we have 7 wins. But the key thing is, for each of the wins, we're doing 20 points of gain, so we have more gains. We make more money per gain because we kept our 10-point stop loss. So that's 2,400. So that was the best strategy, is just to set your limit order at the top or the bottom, and then set your take profit at the top or the bottom, and just let it play out. And this is beautiful because now you don't have to be nervous about when you should be closing the trade. Set your limit order to get in here, set your long limit order to close the long at the top, have a 10-point stop loss in case the price goes the wrong way, and then take your hands off the keyboard, let it play out. So that worked good for that time. Now let's go back and quickly look at those other days. So we're looking at Thursday the 23rd here, because if you remember, I had the positions on these ones as well, so I can quickly show you. So this range was 916 is the bottom and 93 is the top. That's the 20-point range. So if I double click this, you'll see that's 80 ticks. And this was a win. And if we did the same thing at the bottom, we opened it there and did 20 points, we would have got that there. It goes right to the top. And same thing here. There's a win there and another win here. And finally we get a loss as it's coming out, breaking out of the range. And here we've got a win there, win there, win there, win. There's 4 wins. And then here's our loss as it price breaks down out of the range. But I'll take 4 wins and 1 loss all day if I can get that win rate. So here's another one. This is a tighter range. We've got 947 at the bottom. It goes up to 960. So I think I just did a 10-point, 40 ticks. I said 10 points here because it's so tight. We've got 1 win, 2 wins, 3 wins, 4 wins, and a loss. 1, 2, 3, 4, and a loss. 4 wins and a loss. So we 3 times this day we had 4 wins and a loss. So let's look at another day. Let's go back to the previous day, the 22nd, and we'll do the same thing. We'll quickly look at our win rate here. So this looks pretty tight. This is a 998, goes up to 27. So it's actually bigger than I first looked at it. I said let's do a 90 ticks. Widen this up a bit more. So here I actually put 22.5. What I meant to do was 20. So if I'm going to change this quick, that should be not 90, that should be 80. You can see that's a win. Yeah, another win. So got 2 wins, and then that's where price breaks out and stops me out there as a loss there. And now let's go further. 1, 2, 3 wins. This one took a while to play out. 4. Oh, this is where 3 wins and a loss. And then I thought price was going to come back up again. I would have taken another loss there before price came down. I gave up. But, you know, 3 wins and 2 losses, that's still a good ratio. And that's the idea. That's it. Look for consolidation. Use 3 points to define the top and bottom of the range. Look at the size of the range. Is it a 10-point range, 15-point range, 20-point range? Then when you set your limit orders at the top or the bottom, have a 10-point stop loss, and the take profit should be the size of the range. 20 points, 15 points, 10 points, whatever it is. And as soon as the stop loss gets hit, there's a good chance price is breaking out of the range. So take a close look at that. And that's it. Have fun.